President Trump makes a proclamation that sends shockwaves across the globe. He declares it Liberation Day as he announces sweeping tariffs on a wide range of goods from numerous countries. These tariffs, he argues, are necessary to protect American jobs and interests. However, many see it as the opening salvo in a new era of trade wars. This decision, with its potential for global economic disruption, immediately draws comparisons to another seismic event, Brexit. The tariffs, affecting everything from electronics to automobiles, target both allies and rivals. The impact is swift and severe. Stock markets worldwide tumble as investors grapple with the uncertainty. The interconnectedness of the global economy means that the tremors are felt far beyond American shores. Trump's move marks a significant departure from decades of US trade policy. It signals a retreat from the principles of free trade and globalization that have underpinned the post-World War II economic order. This abrupt shift leaves many wondering about the future of global trade and the role of the US in shaping it. The parallels between Trump's tariffs and Brexit are impossible to ignore. Both represent a rejection of the established global order, a retreat from multilateralism and a turn towards protectionism. Just as Britain's decision to leave the European Union sends shockwaves through the continent, Trump's tariffs are seen as a withdrawal from America's traditional role as a champion of free trade. Both events are driven by a similar sentiment, a belief that the existing system is unfair and that a more nationalist approach is needed to protect domestic interests. In both cases, there is a sense that globalization has gone too far, benefiting elites at the expense of ordinary people. However, the comparison can only be taken so far. While Brexit represents a complete break from a trading bloc, Trump's tariffs are more akin to a renegotiation, albeit a forceful one, of existing trade relationships. Nevertheless, the underlying message is clear. The old rules no longer apply. The immediate impact of Trump's tariffs is felt most acutely in the global financial markets. Stock markets, already jittery from geopolitical uncertainty, go into freefall. The Dow Jones Industrial Average, a key indicator of US stock market health, experiences its biggest single-day drop since the dark days of the 2020 pandemic crash. Tech companies, heavily reliant on global supply chains and export markets, are hit particularly hard. Giants like Apple, Amazon, and Microsoft see billions wiped off their valuations. The ripple effect spreads to other sectors, as investors, fearing a full-blown trade war, flee to the perceived safety of government bonds. The fear is palpable. Retirement accounts heavily invested in the stock markets see their balances dwindle. Consumers worried about the future start to tighten their belts. The spectre of recession looms large. China, the primary target of Trump's tariffs, is quick to retaliate. Within hours of the US announcement, Beijing unveils its own set of tariffs on a range of American goods. The message is clear. China will not be bullied and is prepared to engage in a tit-for-tat trade war. The Chinese tariffs target key American exports, including agricultural products, automobiles, and aircraft. The move is designed to inflict maximum economic pain on sectors seen as crucial to Trump's political base. It is a calculated response, aimed at forcing the US to reconsider its aggressive stance. Beyond the immediate economic impact, China's response signals a broader shift in the global balance of power. It demonstrates that China is no longer willing to accept a subordinate role in the global trading system and is prepared to challenge US dominance. Europe braces for impact. While the initial salvos in the trade war fire across the Pacific, Europe watches with a mixture of apprehension and opportunity. The European Union, already grappling with the fallout from Brexit, finds itself caught in the crossfire of a trade war not of its making. On the one hand, European businesses face the prospect of collateral damage. American tariffs on Chinese goods disrupt global supply chains, hurting European companies that rely on components from both countries. Additionally, a slowdown in the global economy triggered by the trade war inevitably impacts European growth. On the other hand, the escalating trade tensions present Europe with an opportunity. As the United States retreats from its traditional role as a champion of free trade, Europe sees a chance to step into the void and strengthen its own economic ties with the rest of the world. Expert opinions on a changing world. Economists and trade experts around the world react with a mixture of alarm and resignation to Trump's tariffs. Many see it as a dangerous gamble, one that could unravel the global trading system and plunge the world into a new era of protectionism and economic conflict. This is a retreat from unfettered free trade, leading to a more unruly and potentially dangerous trade environment, warns Eswar S. Prasad, a trade expert at Cornell University. He argues that the tariffs will harm both the United States and its trading partners, leading to higher prices for consumers, job losses, and slower economic growth. Seaman Johnson, an economist at MIT, points to the potential for the trade war to reshape global trade alliances. Europe's potential resistance to absorbing more Chinese imports poses a challenge for China and could lead to new trade alignments, he says. This could lead to a world divided into competing trade blocs, undermining the multilateral trading system that has underpinned global prosperity for decades. The resilience of free trade. Despite the upheaval caused by Trump's tariffs, some experts caution against predicting the demise of free trade. They argue that the benefits of globalization, while unevenly distributed, are so deeply entrenched that the world finds ways to adapt and continue trading. They point to the interconnectedness of global supply chains, which makes it difficult for countries to fully decouple from each other. Even with tariffs in place, businesses seek ways to minimize disruptions and maintain access to the goods and services they need. Moreover, the rise of e-commerce and digital trade is seen as a force for continued globalization. The internet, by its very nature, transcends national borders, making it easier for businesses and consumers to connect and trade with each other regardless of tariffs or other barriers. A new world order in trade. While the future of free trade remains uncertain, one thing is clear: the global trading system undergoes a period of profound transformation. Trump's tariffs, combined with the rise of China and the growing backlash against globalization in many developed countries, fundamentally alter the dynamics of international trade. The old order, dominated by the United States and characterized by a commitment to free trade and multilateralism, gives way to a new, more fragmented and uncertain landscape. In this new world, regional trade agreements and bilateral deals likely play a more prominent role as countries seek to secure their economic interests in a less predictable environment. This new world order presents both challenges and opportunities. For countries like China, it offers a chance to assert themselves on the global stage and shape the rules of the game to their advantage. For smaller countries, it creates the need to navigate a more complex web of trading relationships and forge new alliances to protect their interests. Navigating the storm. The trade war unleashed by Trump's tariffs represents a defining moment in the history of globalization. It marks a turning point, a shift away from the era of unfettered free trade and towards a more uncertain and potentially volatile future. The path ahead is fraught with risks. The possibility of a full-blown trade war with escalating tariffs and retaliatory measures looms large. Such a scenario would have devastating consequences for the global economy, leading to job losses, higher prices, and slower growth. However, amidst the uncertainty, there are also glimmers of hope. The interconnectedness of the global economy, while a source of vulnerability, is also a source of resilience. The forces of globalization, driven by technological innovation and the pursuit of profit, are not easily reversed. Countries and businesses adapt, finding new ways to trade and prosper. The challenge for policymakers is to manage this transition, to mitigate the risks while harnessing the opportunities of a changing world. This requires a delicate balancing act, one that calls for both pragmatism and a commitment to international cooperation. The stakes are high, and the outcome will shape the global economy for generations to come.